Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. I'm going to try to get this one out quick. My daughter does have a volleyball game around 5 o'clock, so trying to get this one out before I've got to get on the road. We're going to take a look at AON. This is out of the financial sector. Now, this is the vested interest stock screener. This is the criteria we will be looking at. This is the criteria we will be running through in this video. It is a financial company, so it must meet 6 of 9 to make it on my watch list. Keep in mind, this is just a initial screener. So if it doesn't make it on my watch list, that does not mean I'm interested in buying. It means I am interested in doing more of a deep dive into the financials, looking at their balance sheet, their income statement, doing a discounted cash flow analysis if it meets some other criteria, and possibly adding it to the future if I'm going to be adding new positions. Right now, I'm really focused on existing positions, so it may just sit on my watch list while I do a deeper dive, and then, like a lot of other companies, go away after a while. All right, let's jump back over to AON. Check them out on www.aon.com. That is their homepage where I pull this information from. That's www.aon.com. Again, that is their homepage. AON Plc, ticker AON, exists to shape decisions for the better, to protect and enrich the lives of people around the world through actionable analytic insight, globally integrated risk, capital and human capital expertise, and locally relevant solutions. Our colleagues in over 120 countries, I think that's the key there, they're scattered all around the world, helping wealthy individuals and businesses provide our clients with the clarity and confidence to make better risk and people decisions that protect and grow their businesses. And that's really their bread and butter. I wouldn't say they are an insurance company. They do have some insurance related products that they offer. Some of the things that they do: risk adjusted, risk consultations, risk analytics. They do offer insurance linked securities, actuary services, investment advisory services. They will define benefits and contributions for trusts. Professional service firm is what they are. And you can see here are some of the products that they offer: reinsurance, analytics, AON securities, claims, contract wording and client services, facultative reinsurance, specialty practice groups, treaty reinsurance, risk solutions. So they are helping businesses really around their risk and some of their other, I would say, investment analytics that they offer as well: claims consulting, credit solutions, crisis management, cryptocurrency and blockchain risk management, cyber solutions, directors and offices, liability, environmental risk services. So they're not really the insurance company, but they are giving you an idea of products that you might use to help tamper down the risk associated with your business, or, like I said, if you're a really wealthy individual, around your money and how you pass that on to your future, your kids, grandkids, future generations, and offering trust services like that: property risk consulting, property risk management, terrorism risk management, political risk management, private risk management, right? So really around that risk management portion, as well as some investment strategies that you might be putting together. Kind of a unique company. I don't know a lot of companies that meet this niche, but it seemed interesting, so I thought we'd cover them. All right, now the reason we were taking a look at them, down slightly, ever so slightly, 0.10%. Close out the day at $343.09. We are talking about AON PLC, ticker AON. This is a foreign company as well. It is out of Ireland, so keep that in mind. 52-week range as low as $323.73, as high as $412.97. It is within 15% of a 52-week low. It needs to be under $372.28, so it does fit that criteria there. Market cap of $74.662 billion. A beta of 0.89, so less volatile than the overall market. PE ratio, price earnings, is $28.80. Don't know if that's good or not. Don't know enough about this company or companies like it to really know if that's a good number or not. But really, for financial companies, you should be looking at price to book. We will look at that here in a second. EPS, earnings per share, at $11.88 per share. Earnings date, October 31st, so coming up here towards the end of the month. Forward dividend, $2.98. They are quarterly payers, so divide by 4, though we'll see that here, what their payout per share is per quarter towards the end of the video. Starting dividend yield, 0.87%. Ex-dividend date, November 3rd. You want to be buying on the 2nd or before to get the next dividend. It looks like they are going to pay out on the 14th of November. 1-year target estimate, at least according to Yahoo Finance, $416. That is upside from where it currently sits, and that would be a new 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 0.75%. We compare it to their current 0.87%. Over here, forward 0.87%, same number. Since it is higher, their current dividend yield is higher than their 5-year average. That speaks to potential undervaluation. Payout ratio, I like under 75%. They're at 23.34, so that's well below what I'm looking for. Means that their dividend looks like it's safe, and they have plenty of room to continue to grow that dividend over time. Now, price to book, since this is a financial company, we throw this in. We want 1 or below, typically for companies out of the financial sector, especially banks, but they are well above that, 9.92%. Now, I will say, comparing it to itself over the last little bit over a year, going back to September 2024, it was at 12.7. December 2024, 12.4. March of 2025, 14.09. Was that June of 2025, 10.99. So at 9.92, they are the cheapest they've been in over a year. So I don't know if that, again, you'd have to do more research on companies like this. Maybe it does have a high price to book, and there's nothing wrong with that. Free cash flow. I like growing free cash flow because companies can do some things with that cash flow. They can pay down debt, make acquisitions, reinvest back into the company, carry some of it on the balance sheet, pay a dividend. This company does raise that dividend over time, which is what we like as dividend growth investors, or at least I do. And they can buy back shares. This company hopefully is doing all of those things. Free cash flow going back to December 2021, $2 billion, 2022 up to $3 billion, 2023 up to $3.1 billion, 2024 down to 2.8. So it does look like there's a bit of up and down here. Down to 2.8 there. Trailing 12 months looks like it might be back up at 2.9, but keep in mind we still are showing some 2024 numbers here, at least for November and December so far. So, or still. So we'll have to wait and see how the rest of 2025 shakes out. But either way, it does look like a bit up and down. Repurchase of shares, they are pulling shares out of the market. 2021, 3.5 billion. 2022, 3.2. 2023, 2.7. 2024, 1 billion. And again, don't know if that 1 billion is from 2024 or 2025. We'll have to wait to see how the rest of 2025 shakes out. Jumping over to stockanalysis.com, another source I go to for information. Pick any sources that you like, but I do recommend 2 sources so you can make sure the information you are looking at is accurate and up to date. They do have 13 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $380. It currently sits lower than that lowest estimate. So if it came back up, that would be 11.18% potential upside. Average estimate of $416.54. Very close to what we saw with Yahoo Finance on the previous page. That would represent a 21.87% potential upside. And if it happened to hit their high of $448, that would represent a potential 31.07% upside. Now, I like to look at return on capital employed and earnings per share growth as some initial statistics. Return on capital employed, I love above 10%. They're at 16.47. EPS growth, I like above 5%. They're at 15.59. Very good number for earnings per share growth, and that might be why their price to earnings is so high. And it would need to be growing fast to justify a high price to earnings as well. Revenue growth forecasted at 6.02%. That's typically more of a deep dive number, but I like to throw it in here anyway. Quarterly payers, we mentioned. Payout ratio, very low, 24.36. Dividend growth, double digits, 10.23%. Like to see that with such a payout ratio, such a low payout ratio. I like to see it paired with high dividend growth. 13 years of dividend growth. Buyback yield is negative 6.32%. That means they are issuing more shares than they are buying back. We don't like to see that. Shareholder yield is negative as well, negative 5.44%. We want that to be positive. So we'd like to see both of these numbers positive. They do pay out off schedule, February, May, August, November. April 2023, they were paying 61 cents as a fraction of a share. Raised that up April 2024 to 67 cents as a fraction of a penny. Raised that up again May 2025, most recent raise up to 74 cents as a fraction of a penny. So they are raising that dividend aggressively. Again, double digits, 10.23%. All right, let's run up through the screener, understand the business, check there. Again, they are an interesting company, not really an insurance company, more along the lines of a risk analytic company, risk consulting firm. Growing free cash flow, no. Bit up and down. Growing dividend, yes. Double digits. Dividend growth or dividend payout ratio is under 75%, so check there. Dividend yield theory says they're potentially slightly undervalued, so check there. They are within 15% of a 52-week low, so check there. Return on capital employed is above 10%, so check there. Earnings per share growth is above 5%, so check there. We're looking at 1, 2, 3, 4, 5, 6, 7 out of 9. So it does make the 6 out of 9 or better to make it onto my watch list for a financial company. I will throw it on there. I have not looked at the financials, their balance sheet, their income statement, any of that on this one. Again, very interesting company. Don't think that I've seen one quite in this niche. Let me know if you know of any companies like AON Plc, or if you are aware of this company. What do you think of it? Is it one you're buying? Is it one you're holding? Is it one you're selling? Maybe you're part of that 0.1% downturn today. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Let me know what you think of AON. Again, seems like a very interesting company. Don't know that I've seen one quite in the same niche as this one, so it definitely is a specialty company. Maybe there's some other ones out there that you're aware of. Let me know what you think about it, and let me know if you know of any others. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. Hey, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest during educational and entertainment purposes. Investing involves risk. You can lose money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.